Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. And don't forget to subscribe to my articles and Twitter feed for more information on what we discuss here. So the main problem with the bull market, it's uphill all the way. And this week, we're right back to where we started on Friday, where we closed out the market. So we're just kind of working our way sideways and consolidating the gains a little bit. Today, I want to cover off the compelling stocks from February and simplifying the process. How do you do that easily? And timing the process, there's a little bit to it. Works best if you do it at anywhere near the end of the month but once the first of the month is started, the data won't work as well. So I'll show you how to fix that. And then analyzing the results is a pretty important step. And of course, taking action. So once you have a list of great stocks, unless we do something with them, they're probably just going to be stuff we watch. So we're going to try and get into some of the more compelling setups and show you how to do that. That didn't work really well. Let me try that again. There we go. Okay, so first of all, market started off with a bit of a roar up 200 and has now pulled back and given most of that back. If we just roll into where we were, this was Friday's close, call it 26,000, and we're right back to 26,000 now. So haven't gained a whole bunch, and you can just see the market's been working sideways basically since options expiration. On options expiration, we closed just under, and we've done nothing since. And now we've got a sell signal on the PPO, and again, that's a daily chart. Again, the one thing I would like to point out just in the big picture, and again, we have lots of breadth that I'm having a lot of trouble reconciling my my charts with the current price action. So you have to follow the price action. But one of the things that I like to pay attention to, obviously, is the PPO going below zero. We went below zero, and now we're trying to rally out of the hole. If this was to roll over right here, that would be bearish, and so we want to be cautious. The fact that we didn't get a lot of volume, I know a lot of people are writing about this, but all through the summer, we had lots of bull market. You can see last year we had about the same level of involvement, and that was pretty good for a run, not one red candle in all of 2017 on a weekly chart. So, well, I'm still bullish here because the sentiment is so bullish. One of the things I'm worried about is just if the market decides to roll over here, we do not want to see a high way up here in momentum, a lower high, and then all of a sudden we start to roll over right at zero. That is a recipe for a big market pullback. So want to stay continually watching that, but without question, the market continues to make higher highs all month, and so we should be focused on the higher highs part of it, and we'll let our stops kick us out. Okay, so here we go. The first thing I want to talk about is, let's go back to the dashboard, and on the dashboard, of course, is the scan engine, and this some people don't want to be scanners, and I fully get that. If that just seems too intimidating, what I'd like you to do is take a screenshot of this scan that I'm about to show you, and this is just a really simple scan to run, and we're going to go in and edit it. And what we do here, so really briefly, we want to say country is US, and again, the way you would get that is you just go down to the selection boxes and you would pick, ticker properties and the country, and when we add it, it says and country is US. So we're not going to go for that. We don't really need that to be part of our process, so we're going to take this one out. What's going on there? Can't seem to delete it for some reason. Anyway, what we want to cover off here is the country is the US, the exchange is either the New York Stock Exchange or the NASDAQ, and these two slash marks just comment this out. So you can't be in either. You could be in one exchange or the other. You can't usually be in both. So we want to take that and break it into two groups. And the reason for breaking it into two groups is I had too many stocks in one scan to put them all in a chart list. And again, once we get them, we want to put them in a chart list. And then this is just simple stuff. So we want to decide on the exchange, type is stock, the simple moving average volume. We want it to be at least 300,000 shares. we want this month's high to be greater than last month's maximum high, and the close is greater than $5. Now, if we run this scan this morning, we're not going to get much. Oh, sorry, we still got, because it's for the last market close. But if we ran this scan tomorrow morning, the issue would be it would only bring up the highs from today. So when you have that problem, what you can do is you just say, you want to start at one trading day before the last market close, or you can go back and select from here. Actually, I don't think it'll allow you to select from here. I think you just have to start one trading day. So if you did this tomorrow or early next week and you wanted to see all of the stuff from February, then you just count the number of trading days back and let it do it that way for you. So anyway, we run the scan and we get 173 stocks. Now, we can do a few things with it, but what we probably want to do is either rank them by some sort of ranking and then group them. Actually, let's rank them by the scooter ranking, then by industry, and then by sector. And then when we say available actions and we want to replace an existing chart list with this result and whatever, we're going to just pick. I've got a whole bunch of them here that I drop things into, so I'm going to drop it into George and preserve the sort order. And the idea being, now that we've got it set up that way, we've broken it down, the sort order, when we set it up this way, it'll help us show all of the stocks by group, and we can just go see what groups are having the best outperformance this month. And here's a whole bunch of biotech stocks that are starting to fly. Now, again, the idea here is to go through and find what you're looking for, not necessarily anything new, but we know that the medical equipment stocks have been doing quite well. So anywhere we want to jump into here, we can do that, view all, and we were on 840, so that's page 8. Sorry, page 9. And so here we go down here, and this stock is beautiful. It's just hitting new 52-week highs here. I'm trying to get up above. And again, normally we'd look at weekly charts. You're more than welcome to switch it to weekly. That's what I would prefer, but we'll just float through on these daily charts for now. And the beauty about the scan, the way I wrote it, is that it is just looking for a stock that made a new high in February that's higher than last month's or any of the previous 12 months high. So it doesn't have to hit the high today, which is the good part. It only has to hit the high sometime in February. And so in this case, it's hit the high, it's pulled back to support, and this one probably looks a little better for entry rather than trying to find something that's been spiking up from 42 to 56, and all of a sudden you're trying to pick it up $12 later. So here's Tandem Diabetes Care, and this one is just starting to break out. It looks really nice, but a huge gap here, and obviously they've come out with some sort of technology. Fluidigm, these stocks are just breaking out. And again, you don't have to pick any one of these. I've picked 173 from the NASDAQ, and I think 300 and some from the New York Stock Exchange. And just working through these charts, I mean, you can do this while watching The Bachelor on TV or watching your favorite PGA Tour. Just set up a couple of chart lists, dump them in there, and then just scroll through and look for nice breakouts. So in this case, the stock has built a beautiful base coming up 53.70 here. Now it's trying to break through that high after consolidating for 2 or 3 weeks. Probably something going on here that makes this stock look so good. So those are the kind of charts that I would like to see. And again, normally I'd rather look at the weekly chart. So we're going to go to and do that in just a second, and I'll show you how to change your whole chart list from whatever your daily default is to a weekly chart. And so looking at this, this one's got an upsloping consolidation here where it was 58.50 back in August, and it gently every month seems to make a new high. And right now we're in the middle of the range. So I would say if it gets back through this 75 level, you probably want to take that trade and let it run up. I think the hard part here is this one's got quite a bit of movement. 66 to 47 is almost a 30% haircut, so that's a little bit hard to keep in your bank account. Here is the breakout at $36. We're at 38 now, so it's up a little bit, but this one looks like it's just getting started. Okay, so you get the idea. Anyway, what we want to do on any one of these charts, you just click on it. And let's say you wanted to look at it in your normal weekly mode. I have a button set up over here that gives me my weekly charts. And so down at the bottom here is an important button called Apply Style to All. And so we're just going to click on this button. And what we can do, so now every chart in here, if we go back to View all of the charts will be set up with my weekly chart settings. And again, I like to change the background and make them look considerably different. So I know I'm looking at a weekly chart or a daily chart. I try not to use the same backgrounds for everything, so that, as an example, I've got a 60-minute chart and it's got a green border and, way different look, so that as soon as I flip to a chart, I know what I'm looking at and I can work through the chart list based on that expectation. So anyway, as we go through these charts, these are ETFs here that obviously need to be added to the ETF list. Let me just get to the bottom here and go to page 3, I think. So as we work through, I rank them by scooter ranking and then by industry. So you can just see this stock has been one of the top performers all through the fall. So when the market was dropping hard, this was holding up. It's just this week that it broke out to fresh new 52-week highs. We had to get above this 89.18 from last November, and it's breaking out right now. So these are the kind of stocks, they're just starting to percolate. And there was a nice PPO downtrend here that just broke up in early February. So these are the nice shapes on charts. Here's Fox, and it's got kind of a triple top building here. So if it can break out to the upside, this is pretty bullish. One thing that would concern me on this chart is the relative strength line broke back in December and it hasn't been able to really get it going again. And what relative strength means is if it's outperforming the S&P 500, then institutional investors who are trying to outperform the index are more interested. As the stock stops outperforming, they might be more inclined to sell away. So here we can see some upsloping trend lines. We can see some relative strength starting to underperform. Doesn't mean it's going to fail here. The scooter ranking's been holding up for a whole year as one of the top performing stocks, going all the way back to the initial thrust in 2017. And when we got the thrust in the summer of 2018, this is like an exhaustion push where it pushes up and it just needs time to consolidate. So now we're consolidating sideways, and the real question is, unless it breaks out, you don't want to own the stock. And if it breaks out, your stop would go right here at $49, and you'd give it room to break out. And any sort of a pullback, you'd just say, kick me out, because you want the stock to keep running. Okay, so here's meat, and this one's quite an interesting stock. We look at the $6 level here. So obviously a small cap, and the scooter ranking for it is 93.9. So it's one of the top performers in the small cap area. And what we see here is, any sort of a breakout to new 2-year highs here. It broke out and it's consolidated sideways in a very nice tight consolidation. And the only thing I would say here is, I wouldn't let it get much more than it's hard, because this is a 10% move per week. And so you're going to have to try and find a relatively loose stop, unfortunately. And you want to just see the stock continue to climb. Now, if the PPO rolls over right here, I would let somebody else own the stock. Don't try to force it. What I'd prefer to find is something that's been on a big downtrend and starts to kick up and make new 52-week highs. And those are a little easier to hold. So Interactive Corp, this one's trying to break out to new 52-week highs as well. Quinn Street. And again, you don't have to spend a whole bunch of time. You're looking for something specific on the chart. And I like this T-Mobile chart. Here's a big, beautiful base at 68, going back 2 years, just starting to push through to the top side. And the PPO line, this is a good one to show. There's two things going on here. And again, technical analysis, one of the things that it works really well for is having decisive reasons for getting in and out at a certain time. So it helps you more with the timing of the stock. And what I would just say is, if it can't hold $70 here, I'd be a little concerned. There was a relative strength uptrend going in here. and we started to lose that. And so now it's still holding in line with the S&P, but it hasn't continued to outperform. And just whenever you see these lines breaking, this is a more important thing to be aware of. And then obviously we've got the down approach here. Now this doesn't look like much, but this is 8 or 10 months where the stock is underperforming, briefly tries to break out, fails again. But now we've actually been making new 52-week highs in relative strength, which is good. On the PPO, this is one thing that I think is really, really important. We're sitting here right now, and if the stock was to roll over right here, that would be quite predictable, and that would be a fail. We have an uptrend here in momentum as well. And so we're at the decision point for the stock. Does it have the power to really start surging, or does it roll over right here? And if it rolls over right here, I would let somebody else own it because it's in a relatively risky place. And that is the PPO is relatively low. And if it was to start to turn up here, that's a nice entry with lots of runway to the sky. So same sort of thing here where it broke out from this base and then took off and went on a $20 run in about 9 months. And here we've got exactly the opposite where if it started to break down here, we've got a PPO very close to zero and starts to break down, and you can see the stock could move down meaningfully. So it's just using that technical tool to help you say this has been a strong stock. It's trying to break out. And if the breakout is failing, then that would be what we'd consider a false breakout. And when it's doing that just with a PPO very close to zero, that would suggest to me to be much more cautious on the stock. Okay, let's go back to searching in the group. So here's Scripps, and this is breaking out to new 52-week highs. Obviously a big surge this week. A little hard to jump on it there. Columbia Sportswear, I like this breakout, so I wouldn't mind if it consolidated a little bit, and then you got the chance to pick it up again. And looking through, here's iRobot. This one's just breaking out to new highs. PPO is perfect, just starting to surge up again. And I really like how far ahead it is of its signal line. That's usually quite important. And so we could put a horizontal line here. Let's just call it 110 or something. Just looking across. And, this looks like it's just ready to start now. So comfortable with something like that. And then you just put your stop at whatever your breakout level is. Same thing here for Sleep Number. Big declining downtrend here, just starting to break out on the PPO. Let's click on that one and just show you that with an actual trend line. So we want to just take and draw a trend line across the tops here, and you can see how it's breaking out above this downward trend. I really like that. Same sort of inflection point as T-Mobile. In this case, it's a positive resolve with high volume, and we're breaking through a nice price level here. And again, if you hold down the command key on a Mac, that'll help give you a straight horizontal line. If you let it go, you can see the problem. So hold it down and then just let it settle there. And on a PC, it's probably Control. So just draw your line in there and look at this new relative strength. What's it trying to tell us? It's breaking up new 5-year highs or 3-year highs in relative strength. So that's very bullish, just as the stock is starting to break out PPO. So this is a really nice entry for me. I'd like this here, and I would just put my stop, let's say, below last week's low. I probably wouldn't let it get too far away. But I really like the setup, both in momentum and the fact that the PPO just started February, barely above zero, turning and making a positive cross. This could run for a while. So that's the kind of thing that I'd be looking more for. Okay, so let's go back and look at the scan again. And we were scanning for the NASDAQ. So now what we would do is we would go in here and just click on this. And I want to get rid of the slashes. And what the slashes do is it tells the computer to ignore those lines. And so now I've said search on the New York Stock Exchange and run the scan. And so we run the scan, and we're going to get our scan results. And here I'm going to take it and I'm going to dump it into, let's just pick a different file, whatever. I've got lots of files to look at. And one of the files here is whatever. We could go down and put it in Dire Straits or something like that. And if I had taken the time to sort it, I would just click on sort order. And so I'm going to show you how to do that. But again, this is only going to sort it alphabetically, not really the way we want to sort it. So in order to change our list sort, we're going to go to edit. You're going to scroll down to the bottom of the page and select all, and then just say remove these numbers from here. And as it removes the numbers, then we can go back and sort it in the proper order. So we want to go up here and pick summary, because that gives us all of the choices about the way to sort things. And we're going to select scooter ranking again, and then industry, and then software or sector. And if we just scroll down and look, so we've got all of these communication services. Here's lots of discretionary stocks that made new 52-week highs. Energy stocks are just starting to turn up. There's been some nice moves in the pipelines. Financial stocks. So again, all of these stocks are running nicely. A good place to go. So now what we want to do is we need to go put these, we want to save the sort order. So we're in summary mode. We go to the bottom of the page and click number in sorted order. And that's going to allow us to search these stocks based on that order. And again, let's just whatever, we're going to scroll down until we get to something here. So we'll go into Shaw Communications. So this is a Canadian company listed on the US market. And if you wanted to stay in a daily view, you would keep whatever your default is. If you wanted to go to whatever, let's just go to a 60-minute view. And then again, if I save this chart in my 60-minute view, you know, do I want to own that? Whatever. The thing to do is you can scroll down here and apply the style to all. So it's whatever style you want, and you just click on that. Now, the other thing you can do is, let's just say you don't have a style you want and you like Martin Pring's Nirvana weekly chart or whatever. You can go in. I've saved some of these, but down at the bottom here, you've got some specific sorts that you can use. In my Greg Schnell is my daily. Here's Tom Bowley's. So lots of ideas and choices there. John Murphy, he does a lot of charts with the Murphy chart style. Anyway, you can pick any one of these. I'm going to stay with whatever. Let's just go pick Pring's Nirvana weekly. And anytime Martin writes a blog and it's set up like this, you can click on the chart, right, and save it into your own chart list. And when you save it into your own chart list, then you can go in and you can save it as a chart style by saying add new and then putting a name on it. And in this case, I've called it the Pring Nirvana Weekly. So what is Nirvana Weekly? Well, you've got the price up at the top, and then you have the KST for the price. And then you have the relative strength of the stock compared to the S&P 500. And for me, that would always be in purple, right? But Martin does it as a line chart with a simple moving average on it, or an exponential moving average on it of 65. And then this bottom KST is the KST of the relative strength. So the KST of how the chart is performing, and then that would compare it to the actual price. So in this case, the stock continues to underperform the S&P. We haven't had a KST above zero for a long period of time. Whatever, this is a pretty important chart to just be aware of. And obviously, if we started to get a trend change here where the KST was turning up just above zero, that's a pretty nice place to get on board. Stock starts to break out above $22, whatever. And then you would apply this style to all. And again, you can change these as often as you want, but every time you change them, and especially the date, the amount of time in the chart, it'll say, do you want to change the period setting? And what the period setting is how many weeks or days. And as soon as I do that, it'll get rid of all my annotations on every chart in the list. So if you like the chart, let's just say that I like this chart and I wanted to save it. If I know that I'm going to keep changing the dates and times on these lists, then save it to something else. And I have one that I use for every chart I write in all of my blogs and articles. And so I would go into here and I would save it as the Canadian Technician SJR, and I usually put the date that I save it. So just to give you some ideas here, 0301, so 2019, and I usually put the year first and then the month and then the day, so it holds the sort order better. And now if you look at this chart list, you'll see everything sorted alphabetically by the name of the stock. And if we just scrolled up to here's the marijuana ETF, and I've been covering it regularly because it's just been hovering, and it's in. I think, as I mentioned on Wednesday, that the marijuana names are very susceptible to rolling over, and I tried to make the point to just be very careful. I know a lot of people are keen on them, and keep riding the ride while it works, but make sure you have an exit plan. So anyway, those are ideas for ways to manipulate the stock. Let's just go back to my weekly chart because I think that works better for me. And then what I would do here is I would just apply the style to all. And again, all of a sudden, it's going to change all of the charts to this particular style. And we can just go back now, jump into the, I didn't really want to do that. I screwed up all of my charts that were in this list. That was a big mistake. Anyway, so I'm going to go back into Dire Straits. And what we can see on Dire Straits here is all of these different charts going down here. I think we were at Shaw or something. So here's Shaw Communications, whatever. We'll just go to Decker's Outdoor. And we've got this Pring chart style. So let's go to something different. And again, just change it by applying style to all. Okay. And so we got that. And again, here's your Decker's Outdoor, and this is moving up nicely, and you can just see a downsloping PPO trend for about 9 months, just starting to move higher. And as long as the stock keeps maintaining this breakout, continually making higher highs, I think you want to own it. This looks good. The PPO's been above zero for almost 2 years, and the stock just keeps stretching up to the high side. Okay, and again, if you were a Canadian investor, how would we do this? We would I have one all set up for the Canadian stock, so I'll just show you that one. So this monthly breakout scan, and on this one, it just says country is Canada, and it does the same thing. Just so if you're trying to format that, that's how the scan would look. Okay, let's go back to monthly breakout scan for the USA. And again, the one thing I didn't cover off is that you can hit rank by dividend. And the idea behind rank by dividend is when it shows you the scan results, it'll put the stock with whatever you rank it by first. And in this case, I ranked it by dividend. And as an example, let's say Boeing has a big dividend or something, then that would show at the top of the list, and you'd be able to sort your stocks by dividend payment. And you can see the yield is up here in the top. And so just by using that rank order sort, that would help you out. So thank you for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting information shows. Thank you for joining me. Hopefully there were some ideas there. And again, just be cautious here. The market's been pausing. Thanks, everybody. Bye-bye.
you.